over the last 6 years, I've truly learned what it's like to invest, run funds, and understand what it's like to have the risk management side of the equation versus just the opportunity side of the equation, which is what you do when you're an entrepreneur. The risk, you can't even think about it. You just have to go, sell, make it happen, problem solve, and ultimately not fail, right? That's the entrepreneur mindset. The VC mindset is, this is most likely going to fail. You're most likely going to run out of money. Your customers are most likely going to either cap out or go away. And you're most likely not far enough along for me to invest yet. That's the venture capital mindset. Invest. Like, your job is as an investor to invest, but your job, because it's the inverse of that equation. It's your job is to figure out, why do I not invest? How do I not lose money?
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast, and today we have Drew Leahy with us. Drew is the managing partner of Hawke Ventures, where he operates the venture firm through fundraising, diligence, and operating investments. Drew is a data-driven and product-focused entrepreneur and VC. In this episode, we talk about how Drew switched from being a musician to now being a venture capitalist, similarities between being a music producer and a venture capitalist, emerging trends in Martech and Adtech, the entrepreneur mindset versus the VC mindset, Hawke Ventures Card program, biggest learning from venture career, and lots more. Without wasting any time, let's dive straight in. Oh wait, if you haven't subscribed to VC 10X yet, please do, and give us a 5-star rating if you find value in this episode. Now, let's start. Hey Drew, so good to have you on the VC 10X podcast. How you doing?
I'm doing awesome, man. Thanks for having me today.
It's my pleasure. All right, to start things off, can we have your story and how you started investing?
Yeah, sure. So I like to say that I'm a musician turned venture capitalist. I started off playing in bands in high school and even in middle school, writing songs, recording in the studio, had my little at-home studio that I had with one of my writing partners at the time. We started a record label. We started recording other bands. We started putting out bands' records. We would hold events and put out sampling artists from all the people that we would work with. Funny enough, being a venture capitalist is very similar to running a record label. It's finding talent, it's producing talent, it's being an advisor, it's being helpful, right? So did all that, went to college at University of Michigan, go Blue. And the summer of after my freshman year, I went and worked for a record producer. A buddy and I had an idea for a website where you could buy and sell stock in artists and bands on a website online. And that stock would trade and go up in market value based on, their performance, right? So I started a company in 2007. I switched from being a music entrepreneur to being a technology entrepreneur. So we started a website. We raised some capital. We ended up moving to Los Angeles in 2010. And so that was my first tech company. It didn't work out. And so we had to move on and get jobs. So then I became an operator at a couple other startups, doing marketing, doing product. And then I left LA to go back to school to finish my degree. So I actually started a business with my brother called snapsuits.com, custom suits for $250 delivered in 14 days. So that was in 2014. We achieved the 800% return on our ad spend. And built this really cool kind of marketing automation, kind of deep platform for doing marketing. And that's when I met the guys at Hawke Media. I actually left Snapsuits to go run the investments at Hawke Media. And then we started the fund. And here we are in 2022 on Fund 1, Fund 2. And so, made the turn from musician to venture capitalist.
That sounds crazy interesting. So a few things here. So let's try to compare the music career that you had earlier to what you have right now. So what are the similarities and what are the differences? You said like talent. So how is the talent part related to music?
So from a talent perspective, think about it this way. You have a band, you got 5 guys and gals. Somebody's got to be the leader. You have to have a brand. You have to do marketing. You have to do sales. You have to have a team dynamic, collaboration. You have to produce a product. You have to take it to market. You have competition. You have to be better than it. And then you have to do things to put yourself out there, to get interviews, to have people know who you are. And the thing about being a musician is that your entire life is about making product and marketing product. And when you're in a startup, all you're doing is building product and marketing product. Now, one just happens to be less of an artistic pursuit than the other. But aside from that, like, there are so many similarities, right?
Right. Yeah, again, I see that. And I didn't know that like even running a music band would require all these sort of functions like marketing, and you need to get on interviews and build a brand, all that
You gotta
stuff.
have an email list, you gotta do marketing, you have to make sure your music's out there and people can hear it, people can come to a show. I mean, running a band is all marketing tech. Literally, that's all you do. You make music and you run marketing technology, and you have people make like posters and looks and brand in Photoshop, and you're just using marketing technology all day long, right? So I went from being an artist, working with artists, being a music manager, to then working with e-commerce businesses. Well, I mean, a lot of e-commerce got started because artists were selling stuff online. How do you buy a t-shirt? How do you buy an album? Where are we going to send it to? Right. I created a Shopify site back in 2011 when Shopify was just starting, right? For Cypress Hill, they were selling a product, and we used Shopify and a fulfillment warehouse, 3PL, to ship them out, right? So, there's a lot of similarities between the businesses for sure.
Right, I see. So while you are now switched over to investing, are you also investing in artists and music ventures?
I've been pretty out of music since about 2014. And I've been mostly focused on investing in SaaS products, in media tech, in commerce enablement. So my focus as an investor is on everything that lives underneath that commerce enablement umbrella, which is ultimately marketing and sales and advertising technology.
Right.
But also some operations as well.
Got it. So talking about Martech and Adtech, so what are some emerging themes in those two areas?
We're seeing a big thread right now in first-party data, in CRM, in managing the customers that you already have. Also understanding where the customers you're getting are coming from, why they're coming to you, right? So we're seeing a much bigger emphasis on understanding ICP, understanding customer segmentation, and understanding really who your customer bases are, right? And then translating that into how do you reach them, how do you talk to them, how do you engage them, how do you resell them, right? There's a lot of pullback coming with Facebook and Instagram advertising. There's a lot of leaning into creating content for TikTok, creating content that is engaging with your audience. As a brand, you have to keep on getting better at telling your story. And as a brand, you have to keep on getting better at figuring out how to make content that can connect with an audience that cares about you, right? Time and time again, design, creative, ingenuity, getting good at that as a brand is something that you need to figure out who on my team is able to create a narrative, create interesting creative, have content that ultimately puts you in front of people who care about what you're doing and what you're selling.
Yeah, exactly. And going back to your switch from music to venture capital. So at that point, when you made the switch, did you have an inclination towards venture capital or some prior experience in this space to start investing?
I've been around the entrepreneurial ecosystem for a long time. As an entrepreneur with a tech company, I pitched investors. I had my own convertible note term sheets that I would send out and negotiate on the convertible note cap. So coming from the entrepreneurship world, I had an understanding of, on the surface, what it looks like to be an investor and what their job looks like, right? I didn't know anything about LPs. I didn't know anything about fundraising for a venture capital fund. I didn't know anything about a lot of the day-to-day operations. I knew a little understanding of the legal side of things and the terms and stock options and exercising options and all the different pieces of that. But I had to learn about what a venture capitalist does and how a venture capitalist operates. I love working with entrepreneurs. I love working with people who are creative and building and solving problems that need to be solved. And so I connect very much on the entrepreneur side, on the build side, on the product side. And over the last 6 years, I've truly learned what it's like to invest, run funds, and understand what it's like to have the risk management side of the equation versus just the opportunity side of the equation, which is what you do when you're an entrepreneur. The risk, you can't even think about it. You just have to go, sell, make it happen, problem solve, and ultimately not fail, right? That's the entrepreneur mindset. The VC mindset is this is most likely going to fail. You're most likely going to run out of money. Your customers are most likely going to either cap out or go away. And you're most likely not far enough along for me to invest yet. That's the venture capital mindset, right? And those are two mindsets at odds with each other.
Absolutely, yeah. And I had Adam Draper from Boost VC on the podcast, and he said something similar, that as an investor, you can't really avoid risk, but you are picking the risk you are willing to take, right?
Correct.
Yeah.
Yeah, and you know, I teach a scout program and a venture fellows program where it's a 12 to 15 week course on venture capital, looking at deals, how to think like an investor. That's ultimately what the Hawke Fellows program creates, is that venture capital mindset. And one of the things that I tell our students, I tell our fellows, is like, your job is to not invest. Your job is as an investor to invest, but your job, because it's the inverse of that equation. It's your job is to figure out, why do I not invest? How do I not lose money? Right. Yeah. And that's a very hard, like perspective to gain when you're an opportunity seeker pretty much your whole life before you're an investor. Right. And so that's a mindset.
Yeah, absolutely. And that's a nice segue to my next question, which is that what are the things that you're looking at while evaluating startup pitches?
Yeah. So, you know, I think one of the things that I like to help entrepreneurs with is the story. It's the narrative. It's the why. It's the how. It's the what, right? Entrepreneurs get really hung up on their product and the features of their product. And they're pretty bad at explaining the benefits. Here's the why. This is where it connects. This is the problem it solves. This is how big the problem I'm solving. Here's what customers are saying, right? Focus on the results of what you're doing. Don't focus on what can happen, right? We can sit around in a room and talk about what could happen or how the world could be all day long. You get one slide for that. It's the first slide or the second slide. It's here's where the world is going, right? And I'm like, okay, validated, right? Now what? Like, so what, right? So I'm always looking for, in pitches, the so what? What's the meat? What's really happening here? How do we cut through the fluff, right? And so I'm an investor who comes in I'm not a first check investor. I'm not a pre-product investor, not a pre-revenue investor. I come in when the thing is doing what you set it out to do. And then I try to see where that can go once you already have that basis, $10,000, $15,000, $20,000 a month in sales. Where is this going? How big can this get? Those are the conversations that I like to have after I'm seeing what is happening in the market with the product right now.
Got it. Yeah. That's a nice approach. And let's talk about the investment process. Like when a pitch is made, what's the process that it goes through?
Yeah. So we got a team here at Hawke Ventures. We review pitch decks. We review data. We review information. If we're interested in finding out more about the company, we'll usually reply back to that pitch with some questions. If that's cool, if that feels right, then we'll get on a phone call. And Mara on our investment team leads our kind of front end of the house for deal flow. If that goes well and we get our questions answered and if we feel like it's a good thesis fit for us, we'll probably introduce one of the other partners, Eric, Tony, myself, to take a look at the company, depending on what the company does and how it works. You know, we'll introduce it to the Hawke Media team to get their feedback. So that's a really big part of our kind of process is like, I look at a company, I think it's cool. I take it to somebody who does marketing every day, or does sales, or does operations, or does whatever every day. And I go, hey, what do you think of this? Is this where the world is going? Does this solve a problem? Can we use it on a brand? Can we use it ourselves at Hawke Media? And so that's a big part of the feedback loop, is like real world application. So if we can apply it in the real world, use it ourselves, use it on a brand, understand where that fits in, then that's when we get really excited. And then we start to do more diligence, look at the finances, look at the data, understand where the company is at today. And then we, make an offer, negotiate some sort of deal. We send our side letter. And if all that kind of works, we're talking probably somewhere between 6 to 12 weeks, depending on what the deal is. Sometimes longer. Very rarely shorter, but sometimes longer. And then we have a new portfolio company. And then the real work begins, and we start to integrate them into the Hawke Media system, introduce them to brands, introduce them to our partners, and we start creating momentum. And then hopefully all that goes really well, and we put more money in to the company because we're producing results for that CEO, for that company. So that's what it typically looks like in a perfect scenario.
Got it. Yeah, that sounds incredible and a very, very well thought out process. And you mentioned about the Scout program here, and let's talk about it a little more. So, because I read it on your website, you have a Scout program at Hawke Ventures, and which is paid for. So anyone who's interested can go in. So how does that work, and how are you evaluating candidates?
Yeah. So the focus of the program is on producing diversity in venture capital. I want to see the next generation of general partners, principals, investors who are making investment decisions and ultimately deciding where capital goes into companies. And so my contribution to that system is I want to teach and give people perspective, show them deal flow, and maybe they become a scout for our venture fund. Maybe they find a deal and we compensate them, right? We just had one of our venture fellows find a deal, do all the diligence for it, and he's going to be supporting that deal. And he's a fantastic individual from Miami, comes from a family business background, and he's amazing. And he came through our diversity venture program, and here we are, helping get some Latinx perspective into the venture capital community, right? So if I can do that with our cohorts and I can have people scout deals, one of the things that I'd like to do is work with other VC firms to tap into our venture fellows to become potential scouts. Maybe someone's a little more interested in biotech and has an interest in biotech than they do commerce enablement, which is what I do. Well, go talk to the biotech VC and be a scout for them, right? Learn their ways, right? So I like apprenticeship. I like teaching. I love giving people a chance to do the work, to learn and come to the next rung on the ladder, right? But it takes time, it takes energy, it takes learning, it takes osmosis, it takes apprenticeship, it takes understanding how deals are done, right? Understanding what the nomenclature is. And so that's what we do. We help provide context and training and education for the next generation of hopefully GPs and principal investors.
Yeah, that sounds incredible. And I haven't heard a lot about such programs out there. So a couple of follow-up questions there. So who can attend these programs? Is there some eligibility criteria? Is it only underrepresented people who can actually become a part of the cohort, or is it open to all? That's one question.
So it's 80% underrepresented. Yeah, sure. Typically in the past, it's been 80% underrepresented and 45% female. So 80% non-white and 40% female. So somewhere around there, I think, is a really nice, great number. It adds a great contribution to the venture capital community. And ultimately, there's an application process. We review applications. And these are business professionals. So not college students, not high school, but folks that are in the business community. They have business acumen and business experience. And we want to teach those people and put them on a venture capital track of some sort.
All right. And how big are the cohorts and how frequently are you running them?
10 to 20, and we do 2 cohorts a year.
Got it. So basically 6 months. And this program is basically how much of a time commitment does it require? Is it like every day or?
It's one night a week. One night a week we do our presentations. There's a little bit of work outside of class with reading and with looking at deals and scoring deals and coming up with analysis. There's a little bit of work outside of class, but the time commitment is less than 2 to 3 hours a week for 12 weeks.
Yeah, that sounds incredible. So someone who's working can also take that, right?
Yeah,
so
that's absolutely the goal. Very part-time, very much a hobby activity. And we meet every week for about 12 to 14 weeks.
Wow, that sounds incredible and really helpful for anyone who's underrepresented and want to break into venture capital, because I see that that's one area where venture community can do a lot more. Like a lot of people talk about, okay, we need to do more, we need to get more underrepresented people over here, people of color, females, but I don't get to see a lot of real applications out there. So I see one here, and I really applaud this. So thank you for doing this.
Yeah, thanks. I mean, look, the gap is with experience, right? The gap is there's a privilege gap, there's an experience gap, there is a lack of understanding of how it works, right? And so if I can provide a bridge for experience, for context, for understanding, I can put something on someone's resume where they didn't have anything before. Well, when you go interview for an associate position, you have venture on your resume now. You didn't before, right? So if I can provide that with my time and my resources and my energy, then I think I can provide have a pretty big impact, at least on an individual level, to get more folks hired and trained for VC. Yeah,
absolutely. All right, so let's talk about your deal flow. So where is most of your deal flow coming from?
Yeah, so our deal flow mostly is coming because of this massive apparatus that Hawke Ventures and Hawke Media have together. Eric, my partner at Hawke Media, he's the CEO. He started Hawke Media over 9 years ago and brought in Tony Del Mercado, who's my business partner and president of Hawke Media. They've been doing angel investing off the balance sheet for about 6 years of that time. I came in to run their angel investment portfolio before we started the fund. And so we've had a lot of deal flow because Hawke Media is such a brand. We get a lot of deal flow through the agency. Eric and I get it very individually, same with Tony. And then Mara as well is out there, who's our investment associate. She's out there talking to VC firms every day, talking to entrepreneurs, going to different events. We have a ton of deal flow that's out there a lot of it comes inbound because we're a specialist firm. Since we specialize in commerce enablement, Martech, Adtech, e-commerce operations, people know that that's our sweet spot. So we get a lot of individual deal flow because we're so specialized.
Yeah, that sounds great. All right, so now let's talk about value add. So once the investment is made, they become a portfolio company. Now, how does the journey look like for the company? How do you add value to them?
Yeah, so we're really unique as a venture capital firm in that we sit next to a very, very well-known digital marketing agency with 300 employees and over 600 brands that we look after on the marketing side. So our value add is that we're operators. We've ran a business for 9 years, Hawke Media, to millions and tens of millions of revenue. We understand all the ins and outs of running a business that's running today, not 6 years ago when our company was acquired and we decided to, start a VC firm, right? No, we're running a business today. Our main value add is how do we invest in a company and get the brands that we're doing marketing for to be using the products that we invest in, the software, the best-in-class tools, right? So that is where our value add is the most. Mara's an operator, I'm an operator, Eric and Tony, obviously operators. So we are very much an operator-focused fund. Our CEOs can talk to us. They can spill their beans. They can say, this is the good, the bad, the ugly. We get it, right? We understand how hard running a business is, and we just want to be there to support them with what they need. And
let's talk about some exciting portfolio companies. What are some companies you've invested in doing exciting work out there?
Yeah, of course. So we have about 26 different portfolio companies from Fund 1 and Fund 2. We have some really exciting investments that I would love to share. I think one of the most interesting companies that we have that's been one of the fastest growing companies in our marketing tech stack is Postscript. They are an SMS for e-commerce brand. They've absolutely exploded out from under us and have gone on to do a lot of really amazing things for the community, and also just grown to be one of the biggest SMS e-commerce companies in the world. We love what they're doing, an amazing team, and it's been super fun to support them. We have a company called Yaguara, which was sold about 18 months ago to a company called Cord Commerce. And Cord Commerce is a headless e-commerce technology company. And the guys who founded it used to do all the headless for Glossier, one of the biggest beauty brands in the world, and really led the way with that technology. We're really big fans of a company called Faring, which just rebranded from they were called Enquire Labs before. They do a fantastic job of doing attribution for how somebody found out about a brand, and then baking that attribution into marketing automation. They can ask all sorts of questions to customers to find out where they came from, why they bought a product, who they are, why does it matter, right? So they're able to build all that into marketing automation, and also just have a better idea of where to spend marketing dollars because they know where people are coming from. That's just to name a few.
Got it. Sure. So those are some exciting companies. I'll make sure to link to them in the blog post that will go with the episode. So coming to my last main question, that is, what's your biggest learning investing over the years?
Somebody asked me this on another podcast, and like the truth is that just because something makes sense and it's smart doesn't mean that other people are going to get it. Straight up. I've made investments where the product is so obvious, it works so well, it does exactly what it's supposed to do, it solves a problem, and people won't adopt it. They don't just obviously get it the way that you do. And I think that's one of the craziest things that I've found in investing is that like smart people doing smart things, solving smart problems, and people still won't get it. They won't adopt. They won't pay. They won't like go through and buy the product and use it, right? And so you always have to ask yourself, like, where is the gap between what I think is smart and solves the problem, and where does the market actually truly see that, right? And so time and time again, you can outsmart yourself. And what I try to do is make sure that we're not outsmarting ourselves and that the market truly wants something. And that's sort of the battle that I've come to realize as an investor, is that like you're investing in people to solve those problems and figure that out. And it's the CEO, it's their team, it's the founders that are going to figure that out. Not me, not my partners, not the agency, not my investors, right? The founders are going to figure out, solve problems, and be next to the customer who wants to pay.
Yeah, absolutely. So basically, you're saying that you are investing in the founder more than the company, right? Is it that?
Oh, I mean, the company's going to change every 6 months. The founder's going to be consistently solving problems, evolving the product for the market, and either being right in lockstep with the market or being somewhere ahead to where the ball is going. And ultimately, these founders are leading a community and being ahead of something that is going to impact the market, specifically the e-commerce market, typically in a positive way, right?
Yeah,
and that's the founders who are going to do that. For
sure. And I had another guest who said that one of my regrets in my investing career is that I just passed on some of really smart founders because they were not working on great problems or not working on a great product or not going after big markets, right? So for those reasons, and then he said that, and after 6 months, we find out that they've actually pivoted to a completely different product and they are doing amazing, right?
Yeah. And what are you gonna do?
Yeah. So now let's move on to our rapid fire round, in which I'll ask you 5 quick questions about the fund, and you can give 5 quick answers. All right.
Cool.
So the first one goes: what are the sectors and regions you invest in?
Yep. Typically North America, but we're open to companies in other countries. But it gets a little murky with owning stock ownership and tax and stuff in other countries. So we typically focus on North America and the U.S., but anywhere in the U.S. There's no real geographic region. Sectors, like we discussed, it's commerce enablement, ad tech, e-commerce tech, marketing technology.
All right. And what stage are you typically investing in?
Early stage, so pre-seed and seed, typically around 20,000 in monthly recurring revenue or monthly revenue. Anywhere between 20 to 100,000 is our sweet spot.
Got it. And what's the typical check size?
50K to 2 million.
Okay. And where can founders pitch you in case they want to go cold or warm?
Yeah, find me on LinkedIn.
Got it. And last one, where can our listeners follow you?
LinkedIn is the best spot for following. That's pretty much where all my content is.
For sure. I'll make sure to put all the links in the show notes below and in the blog post that'll go along. Thank you for coming on. Loved all the insights that you shared, and happy investing.
Thank you, Prashant. Thanks for having me.
My pleasure.